gold and silver are going up regardless of what the Fed does with rates. Because no matter what the Fed does with rates, real interest rates are going down. Even if the Fed raises rates, which I don't think they're going to do, but even if they do it, it won't be enough to close the gap between the increasing inflation rate and the Fed funds rate. So no matter what, real interest rates are going way down. Inflation is going way up, and it's not about oil.
Gold and silver are rising because people prefer holding real assets rather than cash. This is due to changes in interest rates and inflation that make hard assets more attractive. Peter Schiff, a well-known economist and longtime advocate of sound money, explains that regardless of what central banks do with nominal interest rates, real rates are set to decline further. As inflation rises faster than policy rates, the purchasing power of fiat currencies erodes, making gold and silver more attractive as stores of value. Even in a scenario where rates are increased, they are unlikely to keep pace with accelerating inflation, reinforcing the long-term bullish case for precious metals. This environment has historically supported sustained upward trends in gold and silver prices, as investors seek protection against currency debasement and negative real yields. Now, we present the clips from Peter Schiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Gold and silver are going up regardless of what the Fed does with rates. Because no matter what the Fed does with rates, real interest rates are going down. Even if the Fed raises rates, which I don't think they're going to do, but even if they do it, it won't be enough to close the gap between the increasing inflation rate and the Fed funds rate. So no matter what, real interest rates are going way down. Inflation is going way up, and it's not about oil. Oil is not the reason that we're going to have higher inflation. Oil, if anything, will cause recession, not inflation. Why? Because if people have to pay more for energy, they have to cut back on other things. Most of the demand destruction is in discretionary purchases. Yes, you could cut back somewhat on your energy consumption, but you can't turn it to zero. But other items, you don't have to buy at all. You don't have to upgrade your iPhone. You don't have to take a vacation. You don't have to buy the new car. You don't have to buy a new suit of clothes. You can make do with what you've got if you're spending too much money on heat and electricity and gas and food. So those higher prices don't cause inflation. It's only people who have no idea what inflation is that think inflation is rising prices, that think that it's higher oil prices that are inflationary. They're not. They don't cause inflation. The government causes inflation. What will cause more inflation is not the fact that oil prices go up. It's the fact that the Fed ends up printing more money to stimulate the economy because higher oil prices hurt the economy. And it's that new money printing, rate cuts, quantitative easing. That's why we have inflation. It's not oil prices going up. It's what the Fed does in response to oil prices going up. That's what makes all prices go up. If the Fed did nothing, oil prices, energy prices would go up, other prices would come down, and the overall price level would stay the same. Now, the overall standard of living would go down because people would be spending more money on energy and less money on other things. But when the Fed prints a lot of money, then we pay more money for everything. It's not just the price of oil that goes up, it's the price of everything else that goes up. And that's why gold and silver prices are going to keep rising. In fact, let us look at the economic data that came out today that all points to inflation. And by the way, before I even get to that data, the post office came out today and announced that they're increasing the price of a first-class stamp. And so these are the forever stamps. So the new price is going to be 82 cents. That's a 5% increase from the price last year. In 2020, the price was 55 cents. So you're up 49% in 6 years in the price of a stamp. That's 8% a year. 8%. I think that is a better government indicator of the cost of living than the CPI. And the government lies about the CPI. They don't lie about what they charge you to buy a stamp. So the government is telling us that inflation is, whatever it is. And I forget what it acknowledges, maybe 25, 26% over 6 years based on the CPI. But the post office, the price of a stamp has risen by double the official rate of inflation.
Gold and silver continue to strengthen as macro conditions shift decisively against fiat currencies, with rising inflation and declining real interest rates driving long-term momentum. Despite central bank policy uncertainty, the key trend remains intact. Inflation is outpacing interest rates, ensuring real yields stay deeply negative. Higher energy costs are not the root cause of inflation. Rather, they strain consumers, forcing them to cut back elsewhere in the economy. The real inflation driver comes from monetary response. When policymakers inject liquidity to offset economic slowdown, it expands the money supply and pushes prices broadly higher. This dynamic reinforces the role of gold and silver as protection against currency debasement. Even everyday indicators, such as sharp increases in basic service costs, reflect a faster erosion of purchasing power than official data suggests. As monetary expansion continues and confidence in fiat weakens, precious metals remain positioned for sustained upside in this environment. Let's get back to the interview.
Trump is the one that's wrong. The people that actually live in the economy, not in the White House that's being turned into a palace, right? Trump is, worth billions. In fact, he's gained billions in his net worth since he took the oath of office. So obviously, he's not living in the real economy. It's those independent voters that are so disapproving of his handling of the economy. They're the ones that are forced to live in this economy that Trump thinks is red hot. But they know it's ice cold. They know the actual temperature. But anyway, so all of this news is bullish for gold. Stagflation, that's going to get worse on both sides. Economy is going to get weaker. Inflation is going to get stronger. The Fed is on hold until it eventually cuts, because it will be forced to cut by all the political pressure building because of the economy, the weakness in the labor market, the weakness potentially in the stock market. And the Fed is going to excuse, once again, the increase in prices. It's going to ignore money supply, ignore its balance sheet, which is the real tell on inflation. And it's going to claim that it's temporary, it's transitory, it's due to the war, it's a lingering effect of tariffs. We're going to look through that because we have bigger problems, and gold is going to go ballistic. The dollar is going to tank. So before that happens, again, to my customers of Schiff Gold, keep on buying. Gold is not going to stay below 5,000 for long. Right now, it's below 47.50. Buy gold this weekend. Buy silver at 75 and change. Remember, we blew through this $50 resistance. We're not going anywhere near that. The support obviously is now just below 70, but like 75. We are going to take off in the price of silver. This is the best environment. The sell-off, I think, was very healthy. We did get some people that kind of jumped on the bandwagon earlier this year when gold and silver prices were skyrocketing. Gold was over 5,500. Silver was 120. We got some short-term speculators. They've been flushed out. So I think we've cleared out a lot of that excess baggage, and the bull train is going to keep on riding. Some people, I think, now again they're going to have to get much higher prices. They got scared because gold pulled back. Oh, there was a war and gold went down. Yes, because it went up so much in anticipation of the war. So there's a buy the rumor, sell the fact, but the trend is up. You can't be disappointed in $4,750 gold. This is a major uptrend, and we haven't seen the highs. We're not even close to the highs, and we're not even close to the highs in silver. So buy some silver. And don't forget, if you don't have your T-Gold account, if you're a Schiff Gold customer, you're not really a Schiff Gold customer until you also have a T-Gold account. There's no excuse not to set one up. A lot of stuff's going to happen with T-Gold. Trust me, we're working on it. But in the short term, what you can do with T-Gold is fund your account. You could buy some gold and silver. There's no minimums. Just get yourself set up, and you'll be ready to go. Worst case, you own gold and silver, right? Price is going to go up, so your T-Gold account should go up. And again, the gold stocks, they were up this week, but not nearly as much as they should. They're still way off their highs from February, way off their highs. And they never really got to overvalued. They were still cheap before this big correction. And so now they're an even better buy. So if you don't have exposure to mining stocks, get some exposure. Go, if you're not a client of Euro Pacific Asset Management, check out my asset management company. Go to europac.com. And also, you can buy my gold fund. The Euro Pacific Gold Fund, EPGIX, is the no-load symbol. And also, we picked up a new sponsor, my first gold company sponsor, West Red Lake Mining, which is a Canadian company that I've owned for a while. And then they decided to sponsor my actual podcast. So that's another stock that you can look at, too, as the only official gold company that sponsors my podcast. But these gold stocks, I think, are a great speculative opportunity. So if you're bullish on gold and silver, you really should have positions in the mining stocks as well as the metals themselves. In fact, I have a special report that I wrote. This is like a year old now. You can get it on the Europac website. The best way to buy gold, it's still there, and it was buying gold in the ground. Gold stocks and silver stocks have gone way up. The timing on that special report was perfect for anybody who downloaded it and acted on it right when I wrote it, because that was before the gold stocks moved at all, and then they tripled. So it was great timing. But I think the story is still relevant, even if it's not as perfect on a timing perspective. I think it's still cheaper to buy it in the ground than buy it from Schiff Gold, although you should buy both.
Market sentiment is increasingly disconnected from economic reality, with underlying conditions pointing toward a prolonged stagflationary environment that continues to favor precious metals. While official narratives suggest stability, real-world signals point to weakening growth amid persistent inflation pressures. Central banks are effectively trapped, unable to tighten aggressively without damaging financial markets, yet forced toward easing as economic conditions deteriorate. This keeps real interest rates suppressed, which historically supports sustained upside in gold and silver. Recent corrections have helped remove speculative excess, allowing the market to reset on a stronger foundation. With gold holding firm at elevated levels and silver maintaining key support zones, the broader trend remains firmly intact. At the same time, mining equities remain undervalued relative to the metals, offering additional leverage as the cycle progresses. The macro backdrop of monetary expansion, rising costs, and declining confidence in fiat systems continues to drive capital toward hard assets. Share your thoughts on his interview in the comments section below. If you found this market analysis valuable, please support the channel by liking this video and subscribing for more exclusive precious metals content. Don't forget to hit the notification bell to stay updated. Thanks for watching.